Imagine if a building could be divided into shares, the same way a company can, legally, transparently, and globally. That's not a future idea. It's happening right now. SEC Chairman Paul Atkins recently told the Investor Advisor Committee that tokenized assets on public blockchains can streamline the entire relationship between issuers and investors by cutting out layers of intermediaries and reducing information gaps. In a Fox Business interview, he went even further, saying that this shift towards tokenization could reshape the US financial system within just a couple of years. At the New York Times Deal Book Summit, BlackRock CEO Larry Fink warned that if the US doesn't move faster on AI, digitization, and tokenization, other countries will lead the next wave of capital markets. He's already called tokenization the next generation for markets too. Brian Armstrong at Coinbase is pushing the same direction from the crypto side, saying tokenization is the future and that it's time to bring every asset on-chain. Major US banks are already running pilots around stablecoins, custody, and trading to build that infrastructure. And this isn't theory anymore. According to Boston Consulting Group, over $6 billion in real-world assets have already been tokenized. Citibank estimates the tokenized assets market could reach up to $5 trillion by 2030, with real estate leading that shift. If you don't know me, I'm Heidi, an ambassador for GAIA. I work closely with our founder, Johnny Zhang, the CEO of Premier, who has developed over 100 million in projects and managed more than 1 billion in assets. For decades, access to high-quality real estate investments stayed concentrated among institutions. Tokenization is changing that by making real ownership more accessible, more transparent, and more liquid. This video isn't about hype. It's about the facts, how tokenization works, why it's legal, and how it's already reshaping ownership. By the end, you'll understand what tokenization is, how it works, and how you can benefit from this revolution. Tokenization sounds complicated, but it's actually very simple. In the real world, like a building for example, and you break it into many small digital pieces. Those pieces are called tokens. Each token stands for a small slice of that building. Who owns which slice is written on a blockchain, which is just a secure online record that everyone can see and no one can quietly change. So, tokenization does not change the building. It only changes how we keep score of who owns what. So here's an example. If a property is worth $10 million, you could split it into 1 million digital pieces. Each piece would then represent $10 worth of that property. That means someone doesn't need $10 million to get exposure. They can start with a much smaller amount. Let's make it more real. USP is a real estate fund we work with that uses tokenization. Inside USP, there are real properties with a total value of over $61 million. Instead of getting a thick stack of paper documents, each person gets a digital record that shows their slice. Money coming in from the properties, like rent or profit distributions, are tracked and paid out using the same digital system so that everything is easier to see and follow. Step 1. Legal preparation. The property is placed in a legal entity such as an LLC or a trust. The entity's shares are then converted into digital tokens. Each token is backed by legal documents filed under SEC exemptions such as Regulation D, Regulation S, or Regulation A+. Step 2. Investor access. Investors can buy these tokens through regulated platforms such as Securitize, GAIA, or Red Swan. These platforms partner with licensed transfer agents and require Know Your Customer, or KYC, verification. Step 3. Income and liquidity. Token holders can earn rental income or profit distributions, and they can trade their tokens on secondary markets after the lockup period, which is normally about 1 year. Traditional property transfers can take 45 to 95 days. Tokenized transactions can settle within seconds once compliance checks are completed. Let's make this practical. Imagine a large apartment building in the US worth $10 million. In the traditional world, you'd need a huge check, a bank, a broker, and a lot of paperwork just to get a small slice of that deal. With tokenization, it works much differently. Instead of one giant ownership stake, we can break its interest in that building into small digital pieces. For example, that same $10 million building could be split into 100,000 digital pieces, each representing $100. Now, instead of needing hundreds of thousands of dollars, someone could start with just $100 and still have exposure to a real income-producing property in the US. Here's what that means in simple terms. You don't have to buy the whole building. You don't need to be in the US. You don't need to talk to a dozen middlemen. You create an account, complete basic verification, choose how much you want to put in, and you receive digital pieces that represent your slice of that pool. We built USP so people around the world can access US real estate with far fewer barriers. No high minimums, no layers of middlemen. Just a clear digital way to hold pieces of real-world assets. The goal is simple: to give more people a path to work toward financial freedom by owning real estate and earning truly passive income, while those assets can grow over time. And you can start with as little as $100. And those same investors could keep holding tokens for ongoing rental income, or sell their tokens to another investor on a secondary marketplace. Liquidity, transparency, and automation tied to a real income-producing property. In a project like this, tokenization means faster capital recovery, a broader investor base, and a permanent digital record of every transaction from acquisition to refinance to yield distribution. Tokenization is transforming how we invest forever, and you don't want to miss it. Digital ownership might sound intimidating at first, but it's the same asset, only the ownership, transparency, and liquidity are improving. Technology is always upgrading how records are kept. Electronic stock certificates in the 1990s to digital payments in the 2000s to now tokenized real-world assets in the 2020s. Tokenization isn't the future, it's already here, and you don't want to be the one on the outside watching it happen. It's why we built GAIA, a platform designed to make real-world assets accessible to people everywhere, not just institutions. On GAIA, you can explore tokenized real estate, along with other real-world sectors like AI, biotech, gaming, and even entertainment. You can access real-world assets starting at just $100, and you can fund your account with USDT, USDC, or USD, whatever works for you. It's free to create an account, and it takes less than 1 minute. Hit the link below, and I'll see you on GAIA.